everyone, let's get real about how to buy smart in 2025. Housing prices have shot up. But does that mean you've missed the boat? No. In fact, this is your year to negotiate. Will housing prices crash like the stock market? Straight answer again, no. But they will cool down. The reason why they won't crash is because new projects from trusted developers are selling reasonably fast, and unsold stock of housing units, also known as inventory, is comfortable right now. I asked data analytics firm PropEquity for unsold inventory of new launches in top metros at the end of 2024, and the numbers are not alarming just yet. Even in Gurgaon, where prices have doubled in areas like Golf Course Road in the last 12 months. Let's step back and look at the longer-term trends, which are actually much more revealing. Since 2019, which is pre-COVID, property prices in the National Capital Region NCR, including Gurgaon, Dwarka Expressway, Noida, have surged the most. Prices here have jumped a massive 200% plus, which is 212% to be precise. But here's the interesting part. Unsold inventory has dropped from 26 months to just 11 months. That tells you demand is still strong and supply is tight. Come to Mumbai region, India's most expensive housing market. MMR has actually clocked just a 28% rise since 2019 with unsold inventory at 14 months. That's PropEquity data. You may say, what are you talking about, Manisha? I've seen price rises of 50, 60, 70% in some areas. And you're not wrong. But here's the thing. After demonetization, the real estate market hit a serious slowdown. We all know that. And post-COVID, it's been making up for lost time. Take Dombivli, for instance. Prices there have risen about 40% since 2019, which comes to less than 10% per year on average. Let's head to the southern market. According to PropEquity, Bengaluru has seen a 67% price jump since pre-COVID, with inventory levels down to just 13 months. Hyderabad, despite having the highest unsold stock amongst all top 8 cities, which is at 20 months right now, is still within stable territory. Here's the point. Most of this price surge has happened in the last 2 to 3 years. But if you zoom out and look at the longer trends, the growth appears much more rational. So unlike mid-cap or small-cap stocks, a 20-30% price crash in housing isn't likely. Remember, inflation is still running high, whether it's labor costs, raw materials like steel and cement, or most importantly, land prices. Plus, most new launches from top-tier developers are selling quite fast. But here's what will shift going forward. Home buyers will have more bargaining power. So keep these points in mind while you're house hunting. A. In any city, localities where prices have doubled or more in the last 12 to 24 months, these will be the first to plateau or even bring in discounts. Builders in these areas will likely start offloading some inventory, if not all, with discounts of 10 to 15% on launch prices. So keep an eye out for that. B. Projects with apartments priced at 5 to 6 crores and above will see slower sales. It's already started, especially the ones from new or non-branded developers. You know as well as I do, buyers at this price point aren't first-timers. They already own homes and can afford to wait to upgrade. Plus, investors will disappear, won't they, once they see price growth starting to cool. Now, smart builders can see the shift. They are already rolling out payment plans to make it easier for home buyers to book a flat. Emaar, Adani, Signature Global and several others have different kind of payment plans which will allow easier payment terms rather than taking 90% of your money in the first 2 years. Remember though, sometimes easier payment plans can be front-loaded on price of the apartment. You must cross-check pricing of similar projects with similar amenities in the same locality or nearby before you go and put down your money. Now, 2025 is a year when the resale market could be your secret weapon to striking a good deal. Many high-ticket sales in hot markets like Gurgaon's Golf Course Extension, Dwarka Expressway, Hyderabad's Tech Corridor, some micro markets of North Bengaluru are particularly being driven by wealthy buyers snapping up multiple units, hoping to flip them before completion or even on completion. My recommendation would be check property listing platforms for projects launched between 2021 and 24. In some projects, resale prices are already lower than the builder's current asking rate. You can use this as leverage when negotiating with developers, and they will come to the table. They know you have other options. You know, when markets start slowing down, it's also a time when the builder's true mettle is tested. Before you put your money down, head to your state's RERA website and check the developer's filings. How much is sold? Does he have all permissions, etc., etc. Pay special attention to the project timelines. To avoid RERA penalties, many builders are now giving themselves 6 years or even longer to complete projects. You have to ask yourself, can you afford to pay both rent and EMI for that long? Also, labor shortages are real, and even top developers are facing the crunch. Don't assume a promised deadline will be met. Check the past delivery track record of the builder. I would not put my money down for any developer who has not completed and delivered even a single project, period. Some developers are notorious for delays. If the previous projects of any builder has been delayed by more than 6 months, please don't expect a miracle this time. You must push for answers from the sales team or the broker selling you the flat. How is the construction going to be funded? Have they tied up with a bank, with an NBFC, with a private equity fund? Has the builder taken a loan to buy land? If the answer is yes, that's a big red flag. You know, when sales slow down, builders with big debt on their books are the first ones to halt construction. They're depending solely on your money to build, and that money will start going towards paying interest on their own debt, and the project will be stalled. You know, I'm a big believer in buying something that you can see and feel. A well-maintained resale apartment in an established condominium or a colony is often a smarter buy than a new launch. Older apartments also offer more carpet area since builders have been shrinking sizes to offset rising costs, and I'm sure you've caught those news headlines as well. And then there's the big advantage of moving in right away. So no waiting, no delays, no headaches, no double burden of EMI plus rent. Amenities are up and running, and a social community is there for your kids to make friends with as well. We've kicked off 2025 with a sweet relief for home buyers, which is RBI's 0.25% or 0.25% rate cut after 5 long years. If inflation cools alongside a global economic softening, more rate cuts could be on the horizon, which means lower EMIs, better affordability for you if you're looking to buy a home or if you've already bought one and have a home loan. So here's the final word from me. You will have more power in the coming year. Take your time, do your homework, and negotiate hard. Even the most bullish builders know that the past 4 years' price surge isn't sustainable. Listen to them and you will hear a common thread of caution.
I worry for those developers who have done run-of-the-mill kind of developments over time. My buyer is becoming more and more discerning, Manisha. You know, a buyer has been well educated today and has traveled the world and is looking for amenities. Families are also moving into, there's no longer the joint family living together. While they live in the same building or the same vicinity, each one wants his own privacy, so they're moving into individual homes. I don't see such a issue where, all these apartments that are being talked of getting launched will get launched and all of them will get completed in a particular time frame. I see a big surge taking place towards developers that come from the, established, I would like to say, stables of development, those that have been giving, continuous supply to the market.
At a time when we see that things may go sideways, things may be difficult in the future, that doesn't mean you don't buy, because you can never time the market. So if you're ready to buy a home, take the plunge. But what's most important today is to make sure that does the developer have financial closure? Okay, which basically means, does he have enough sales in the project that will take care of the cost of construction, or does he have enough construction finance that will help him take care of the cost of construction? Because while RERA says that when money comes in, the developer has to put 70% back into the project, What happens if you don't make sales? And in a slowdown, if sales don't happen, the project gets delayed, and that's when the down cycle starts. So please, for God's sake, go out there and understand whether the developer has achieved financial closure. And it's totally fair game to ask the salespeople to ask in different ways what's available, how much is sold, where is the money coming from to build. And if you have an answer to that, a large part of the risk as you go forward gets mitigated because the cash flow challenge that the developer faces is taken care of.
It is unsustainable if the price hike keeps on happening. Till now, I think, there has been sustainability. Last 2 3 years the prices have kept on moving up, but if they keep on moving up now, it is going to be unsustainable. It is going to attack the demand, because beyond a point your purchasing power will get impacted. The ability to resell is going to get impacted, or the prices at which you are launching and the prices at which the apartments are getting resold, there will be a huge difference, and that becomes one of the key indicators that now a slowdown is expected. And I'm not saying there is a slowdown, but the prices, the moment they become unsustainable, it leads to a slowdown. So the moment resale prices are trading below the launch prices or the prices being sold by a developer, that is a very good sign to say that unsustainability has crept in. So right now it might not be, but if it carries on, technically we might see something which the developers won't like it.
I don't think it'll come down. I think it'll stabilize. And I think that's what we're seeing is some developers who are being a bit too ambitious, taking their prices up too high, are actually now kind of adjusting because sales are not as strong as they were. And it makes sense because it all comes down to affordability, to ticket size. Personally, I feel it should be linked to wage growth, how wage growth is growing. I think that's where price should be. Maybe a little bit behind that would be healthy as well. So I actually think that prices should stabilize. It's a great time to buy a house as well. If you're an investor trying to flip and hoping for more of these price increases, I wouldn't put my money on that. So I actually think it's going to be quite healthy going forward if us developers can continue and be disciplined. And I think we've seen that largely in Bangalore.
Are there any micro markets in your cities of presence, which is mainly Bengaluru, which are looking overinflated, Aditya?
Yeah, some of the dense areas, Whitefield, Sajapur, some of these areas where there's a lot of IT parks, and the job growths have been high there. The infra hasn't kept up. So some of the boonies of those places back and beyond, we are seeing prices that just don't make sense. We're seeing some, outside developers come in and make those purchases. I guess they're desperate to be in Bangalore. But the key is to be disciplined, because land cost is what you can control. Construction cost is not really out of your control. The North Bangalore has been an investor market and continues to see price increases.
Please choose the place that is worth your lifestyle. Please choose the place that is close to the infrastructure growth. Please choose the place that's as a safe neighborhood, or considered as a safe neighborhood. Please choose a place that is going to be somewhere where you see the family growing. I usually start off with the credibility of the developer, the kind of location that is being created, or the location that we're building in, the kind of development that's being created, the kind of amenities being provided therein. And then it really doesn't matter if the price is, 3 or 5% beyond your reach, or even 5 or 10% beyond your reach, because over a period of time, a home which is bought, which is a home, will always be, they say the price is soon forgotten, the quality is remembered forever. I think the same applies over here. The lifestyle will kind of more than offset what you pay extra as of right now, because you think it's extra today. And we've seen that over the last 5 or 6 years. There's always been a lament about things that you didn't do rather than those that you did.
There is a worry, and there are other leading developers who've expressed this worry that, this is the time when there is a slowdown, and the sales have slowed down, Baman. It's so important to understand and know that the developer has full cover for his construction costs and is well funded. How does a layman or a lay buyer even figure those things out?
That's a great question, Manisha. And if you don't mind, I'll labor over this for a minute. A buyer always has to beware. There's an old saying, buyer beware, right? We all know that. Today, you have all the tools available in your hand to be able to verify the credibility of a developer, the net worth of the developer, the ability of a developer to complete a particular project, his financial closure on projects. Please open the RERA website. Please go through all the forms that developers are filling in. Please see all the approvals that a developer has got. Please put your money only when you've kind of done your due diligence. And of course, there are factors that are important: are the credibility of a developer, the established history of being able to deliver projects, see if there are any litigations in the past. I mean, all these are indicators that will allow you to kind of choose your developer. And please, today you're much more well armed than you were before the advent of RERA. And today RERA has moved into the next, I would say, phase 3 of what kind of information they offer. They're actually providing you data on the kind of and there are a whole host of other sites that give you the kind of new projects that are coming in an area. All one has to do is do some amount of due diligence and be able to choose a home. But more than anything else, please choose a home of a developer that you can trust and reach out to and interact with.
I would just say is that, be a home buyer that needs a home, be a home buyer that is looking to invest for the long term. If you're looking to just buy and flip before OC, that is what can be dangerous for this country. We're seeing that in parts of this country, and I just don't think it's sustainable.
If you're getting wishy-washy answers, right? Walk away. Buy where you get the
That's, I think, the
confidence.
crux of it.
Yeah, buy where you get the confidence that the developers, that the project will not be stuck for want of capital. When markets get tough, this is the single biggest factor that causes delays, and then people get stuck. And then the old stories that we've heard will continue. And then you have to go to RERA, knock on doors, try and get your property, try and fight for interest. Why do you want to even get into that?
Just buy for need, don't buy for speculation. And if this basics can be kept in mind, who needs an advice? If you need a home, you need a home. You will do everything. You'll go to friends, family, borrow, take the right amount of home loan, and you'll shift into your dream home, and you'll be happy with your family. And choose a credible builder. That's what I've been saying for the last 10 to 12 years since I've been in real estate. Choose a good credible builder, figure out what your risk is, don't over leverage, and buy it if you need it.